Time now to get busy with the fizzy, and by that we mean SodaStream. And we got a bunch of props here, folks, and we'll walk you through them in a second. What we're talking about, it's the Israeli-based company that made a big splash in Europe by selling this home carbonation machine. It's right here. Maybe the guys can grab a quick shot of it. Now, SodaStream is looking to boost its market share here in the United States. Here's the machine. Grab this one. Following one of the year's hottest IPOs. Now, joining us right now from Tel Aviv is SodaStream International CEO. He's Daniel Birnbaum. Daniel, great to have you here with us. So you had a great IPO last month. The stock was up more than 100% in the weeks after. Then you guys announced your third quarter results, and the stock took a big hit. It fell 20%. I know it was about a one-time charge, but talk to me about it, because the stock has had some trouble since you announced that news.
Yeah. Well, what happened was we had a great IPO, and we priced it at the top end of the range at $20. And then within 3 weeks, we had a surge to by about 108% up into the 40s, which was pretty dramatic. In the last week alone, before we announced our pricing, our earnings on last week, it was on Monday, we had a 30% increase, about $10 to the share. So it's not completely surprising that once we announced earnings, and these are great earnings, the best, we had record earnings. Right. But it's not totally surprising that we had some investors that took some profits on that. And then we also have very little float in the market. So there's a lot of volatility going on with the stock. Right. But earnings were fantastic.
But talk to me about this one-time charge. From what I understand, it had to do, I believe, either with a contract or an agreement. Can you talk to me a little bit about that? Cancellation of a management fee with a certain company. Explain it so that maybe investors have a better understanding of what it's about.
Right. Well, coming up to the IPO, we were controlled by a private equity firm, Fortissimo Capital, and as is customary in such situations, we had a management fee. It was we paid them a management fee on a quarterly basis as a percentage of our EBITDA. But going public, we decided to terminate that agreement, and we no longer have that. That's good news that we got rid of that, but we had to pay a termination fee to end that. So it's a non-recurring event. Won't happen again. We're stronger moving forward.
I got to ask, Daniel, I mean, everyone always wants to paint an IPO as great if it shoots up in the days and weeks after. I wouldn't feel so fantastic as the seller, because you leave a heck of a lot of money, it looks like, on the table. Are you angry that you didn't price the shares for more?
No, not at all. Not at all. We're very optimistic about the long-term prospects of the company. The business is very healthy. And, you know, we also believe that it's important to leave some meat on the bone. We don't want to take it all, and I believe I'm speaking for the shareholders. They don't want to take it all. They want to allow especially the early shareholders that came on and understand the idea. I mean, it's a unique business model, a razor and blade business model. So those who understand and came on early should enjoy some a good ride looking into the long term.
Daniel, I want to ask you, because 80% of your sales, I think, are in Europe at this point. You guys are, though, aggressively looking at the North American market, but you're dealing with some big players over here in terms of the carbonation market. I think about Coca-Cola and PepsiCo. How do you kind of compete against them?
Well, we do things completely different from they do. We have a very different business model. It's a step change, a game change in the carbonation category. And by the way, it's one of the biggest consumer categories in the world, about $230 billion. So even single-digit market share in such a big category is a very interesting business. But we do things differently. They have bottles and cans. You have to carry them home, and they have some ingredients that might not be so healthy, and they're quite pricey. And for the environment, there's an issue with all those bottles and cans. On all those hot buttons or consumer megatrends, we provide an alternative. Okay, you turn tap water into carbonated water or soda at home in seconds. That has the makings of a revolution in it. So we're very optimistic that we have a role. We have a mission with merit. And we're aggressive and optimistic about what we're going to do.
Are you, I mean, I see this a lot in Germany, in France. The Europeans have been doing this for a few years now. Are you selling the idea more and more in the U.S.?
Well, yeah. About 2 years ago, we entered the U.S. In the retail arena. We were in the U.S. on the web only. And you're right. We had this, and we still have this in many countries in the world. We're in 39 markets in the world. And in some of them, we have very high penetration levels, such as Sweden. In Sweden, we have 20%. household penetration. So it's very well penetrated. We're very well received. In the U.S., we entered Williams-Sonoma 2 years ago. Following success over there, we entered Bloomingdale's and Macy's, Sur La Table, and Kitchen Gourmet, etc. And now, a few months ago, we entered Bed Bath & Beyond, all of the Bed Bath stores in the United States and Canada. It's very well embraced by the retailers. There's a lot of buzz going on at retail and with consumers. So we feel really good about our retail expansion. It's a very controlled retail growth, very disciplined, if you will. We're doing it one step at a time. But we do have a path, and we're talking to other retailers in the United States, and you know, stay tuned for some news.
So give me an idea of when you expect to have a significant portion of the U.S. market, and what kind of percentage are you shooting for? And just got a few seconds here, quickly.
Well, I'll tell you that we have between 5 and 15% household penetration in the markets that are more mature. So I'd say, you know, within 5 to 7 years in the U.S., we should have big numbers over there. But it's a gradual and yet pretty rapid growth that we're expecting in the States. I can tell you North America grew 245% quarter over quarter. So there's good stuff coming.
Got it. Hey, Daniel, thank you so much. Daniel Birnbaum joining us from SodaStream. He's the CEO. We appreciate it, Daniel.